Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. Now, let's begin with this week's outlook. Before we start the chart analysis, here's a quick notice for this week. The United States will switch from daylight saving time to standard time next week. Trading sessions will start 1 hour later in GMT. Please keep this in mind for your trading plans. Now, let's begin with the quarterly chart. Here is the 3-month chart of EURUSD, also called the quarterly chart. As shown here, I see this as a breakout above the long-term downtrend. The key high is around 1.2320. Unless price breaks above this level, we cannot confirm a clear shift into a long-term uptrend. For now, I consider the quarterly chart to be in a broad trendless state between current levels and 1.2320. Next, let's move to the monthly chart. Here too, the downtrend seen on the quarterly chart has been broken to the upside. On this time frame, the notable high can be seen in the green zone between 1.22 and 1.25, while the notable low lies in the blue zone between 1.09 and 1.12. At the moment, I see the market as range-bound within these two zones. A clear breakout above or below would signal the start of a new trend. Although direction remains uncertain, September closed with a relatively long upper wick, and October ended with a bearish candle, suggesting a potential shift toward the downside. We'll look at the details more closely on the weekly and daily charts. Here is the weekly chart of EURUSD. On this time frame, price remains within an ascending channel. The pair touched the upper boundary twice, in July and again in September 2025, and has since been consolidating. The recent high near 1.192 remains an important resistance area, but last week, price fell toward the lower region of this consolidation zone. This could indicate the start of a correction within the broader uptrend. To the downside, the major level to watch on the weekly chart is around 1.12, which also coincides with the 38.2% Fibonacci retracement of the move from the start of the year to the July high. A pullback to this area would still be seen as a normal retracement within the uptrend. Now, let's take a look at the daily chart. On the daily chart, the uptrend that began at the start of 2025 is still technically in place, but since late September, price has broken below the upward trend line. Because of this, I've paused my bullish bias and am taking a more neutral view. Looking at recent price action, we can see that since the September 17 high near 1.192, both highs and lows have been gradually moving lower. After breaking below the 1.159 zone that had been important in early October, price briefly rebounded, but has now fallen below it again, even closing slightly beneath the early October low. Some short-term rebound may occur, but overall, it seems that market participants have shifted to a short-term bearish stance. For now, the next area to watch on the downside is around 1.14, the level reached in late July. A decline toward this zone would be a realistic scenario in the near term. Conversely, to turn bullish again, price would need to break clearly above the recent swing high around 1.173. In summary, EURUSD appears to be entering a corrective phase after the uptrend that has continued since early 2025. It's important to avoid getting caught up in short-term moves and continue to view the market from a long-term perspective. Thank you for watching today's analysis. If you found it helpful, please subscribe and click the like button. Let's continue to approach the markets with patience and discipline. See you in the next outlook.